India's credit market seems to have frozen up. There are multiple problems that have cropped up yesterday. One, the center has run short of money. So the Reserve Bank has increased the ways and means account. What is a ways and means account? Whenever the center feels that has a liquidity problem, it can access the Reserve Bank for cash overdraft. Like you take a overdraft problem. What is happening? Welcome back to Berich. There are three separate strands that is going on in the Indian credit market, which seems to have frozen up. All this means that debt market funds are going to be in trouble. Well, the center has run out of liquidity and is unable to raise money through taxes and other revenue methods. Issuing bonds and receiving receipts is taking time. So the central government has approached the central bank to increase its ways and means method. A ways and means method is an overdraft account of the central government and the state governments. A limit is fixed by the Reserve Bank of India. The center draws on these reserves and later pays off these accounts using either receipts that have come through revenue or borrowing more through bonds. On 1st April, the Economic Affairs Secretary said bombastically that they will not need to borrow more and they have adequate liquidity. In matter of 20 days, they have run out of liquidity and have approached the Reserve Bank of India for increasing their ways and means method. The Reserve Bank has increased the ways and means of the central government to 2 trillion rupees. That is 2 lakh crores rupees has been granted as additional overdraft to the central government. There is trouble brewing in the bond market also. States have run out of revenues. The states' revenues mainly composed of GST revenues, land taxes, and real estate transactions, apart from petrol, diesel, and in some states liquor. Several states have run out of money completely and have asked for an increase in ways and means. That is, the 50% limit for the entire year could be borrowed in 1 month. That is what the central government told these states. The states have exhausted it and asking for their share of revenue. The central government has not been able to pay their shares of revenue, and therefore the state governments have aggressively entered the bond market. This has crowded out corporate bonds and small guys out of the market. States are willing to pay between 7.9 to 8.9% interest. Investors, mutual funds, and banks, insurance companies prefer state government bonds to corporate bonds because these are considered safer and there is very little chance of default. Also, in times of trouble, this can be pledged with Reserve Bank and money can be raised, whereas that is not possible with corporate bonds. All this has led to lesser subscription of corporate bonds and more subscription of state government bonds. This means the India's private sector, which is already credit starved, is going to struggle more. In a previous video in one of the channels, I talked about the coming crisis of NCDs payable by finance companies and the fight between Reserve Bank of India and SEBI on that. Well, things have come to roost because since SEBI and Reserve Bank were passing the parcel, India Bulls Housing Finance Company has gone to the Delhi High Court and got an order. It says since the Reserve Bank imposed a moratorium without consulting these companies need not pay interest and principals of NCD due for 3 months. Therefore, mutual funds are in a bind, big investors are in a bind. Those who bought the NCD papers of India Bulls are not going to receive principal or interest in the near future. And the Delhi High Court has given a stay, making it a legal stamp. This is only the beginning of a flood because India Bulls is only few thousand crores. 2,50,000 crores worth of papers are going to become due before June. Unless the Reserve Bank and SEBI can sit together and discuss and sort out this matter, this problem is not going to go away. These are the problems that are plaguing the Indian bond market. And here we think that by increasing liquidity, banks will willingly lend to MSME and SME. When large finance companies are not able to pay their NCDs, what hope does a small guy have of raising money either from NBFCs or banks? We are living in a fool's paradise. Thank you for watching Berich. If you like my channel, kindly subscribe, press the subscribe button and turn on the bell notifications. In Facebook page, Money page, we are putting more videos. Those interested in following may follow that page and like that channel, and follow us on Money page, Facebook at Money page. There's a WhatsApp number given below. Those desirous of buying my books may send a message and my team would get back to you. Those who want to fix a direct appointment with me can contact me at berichenglish@gmail.com and my team will get back to you. Once again, I thank you for supporting Berich.